Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. You can see that I have drawn many boxes and lines. So we will get into it one by one. First of all, I'm extremely sorry I could not upload video yesterday after CPI because I was traveling. I went to native place, so I'm back to my city, Kolkata, yesterday. So I was traveling. I could not upload video, and sadly, there will not be any video tomorrow as well. Due to some work, I'm flying to Dubai for a couple of days. If the hotel has good Wi-Fi, then yes, I'll be uploading videos from day after tomorrow. But yes, tomorrow I have a morning flight, so I will not be able to upload anything tomorrow. So be careful. Okay. So let's get started. So first of all, let's look at the chart of DXY US dollar index. After CPI, there was a big drop on the chart of DXY, and we can see that dollar index is trying to recover. But in comparison to the selling pressure, the buying power is not much. And if we look at the overall sentiment of the market here, the sentiment is not very positive for DXY. And we can see the market is also respecting FIBO here. When market hit the FIBO 23.6% retracement level, we saw immediate retracement. So again, we can expect same performance from the FIBO, isn't it? So the next resistance on the chart of DXY is around 104.75 to 105. This is the next resistance on the chart of DXY. I'm mentioning this so that you can plan your trades accordingly. But if you look at the overall trend, then overall trend is not very positive right now. We can just see that after a big fall, market is trying to recover. The correlation between gold and DXY is slowly coming to track, but not like the previous time. So no need to follow candle by candle. Just know what is the overall trend. That's it. Okay. You can see gold steadies amid mixed cues. Gold steadied around 1960 an ounce on Thursday, consolidating recent gains as mixed economic data in the US prompted cautious positioning among investors. Gold flat as firm dollar offset support from dovish Fed expectation. So overall, because of the mixed response for the market, we can see that gold is also not going anywhere. So it is better to trade from level to level only again. And guys, today also we have a news coming up in the US session. And today I will be showing you the economic calendar of FastBull. Couple of days ago, I showed you fastbull.com and how effective it is for our fundamental analysis and how we can use the AI signals, how we can use the financial news for our updates. But today I will be showing you the special economic calendar of FastBull. This is the economic calendar of fastbull.com, and you can see it's very simple but yet very powerful. The date is mentioned here 16 November, and you can change the time zone according to your country. And you can see we have a long list of events for the day. But as we all know, not all news are important for us. The high impact news that bring volatility to the market are only important. And to filter the high impact news, just go to the screen here. You can also filter the news as per the country, or you can simply go to more and you can simply click on the 3 stars, and you can see these are the events that are important for us. And for us today, the initial jobless claims that is unpublished will bring volatility to the market. So guys, at the time of news, please be careful. As I always say, do not gamble with your hard-earned money. If you're a beginner, new trader, just observe the market, gain some experience. That's it. Okay, don't do anything rush, because there's a high chance that your stop loss may not work and you may lose your capital. So let me show you what makes it very special. First of all, if you want to know about the news here, just click on views so that you can get a proper picture. And if you want to add alert, you can simply add alert. For example, you are very busy right now, or you'll be very busy at the time of news, but still you want to trade at the time of news, you can simply set alert here. And you can see here 10 minutes before release, 30 minutes before release, you'll get a notification. And if you want to know about the news here, you can see that you can do a detailed study. And the best thing that I liked about the economic calendar is that that it shows the impact of the news on a particular currency or a commodity. For example, Japan's export year on year. You can see USD JPY bullish. Then you can see Australia unemployment rate or USD neutral. So you get the basic idea. So what is the impact of the news on a particular currency? And you can also change it. For example, you guys love to trade on gold. Just simply click on gold here. You can see Australia unemployment rate. What is the impact on gold? XAUUSD neutral. So it is very powerful. Please use it. The link is in the description. Now let's talk about the chart of gold. So on the chart of gold, we have two major resistances. The first resistance is around 1980 to 1984, the box that I have drawn here, and then we have 2000 to 2004. These are the two major resistances on the chart of gold. If gold shows upside, we can expect that market will face some resistance around this area or strong sellers are present. First of all, we have a good trend reversal from 2000 level. 2000 is a big number, round number, so obviously strong sellers are present. And 1980 to 1984, because we can see the previous support will be acting as resistance here. Previous support will be acting as resistance here. And moreover, if you look at the options data, we have the highest open interest at 2000 level, 10,000 contracts, and then at 1980 level, 6,250 contracts, and there have been an addition of 81 contracts. So these two are the major resistances where we can expect the market to face some serious selling pressure, and if market reverses, we can also look for a sell position. So these are the two resistances. Similarly, on the chart of gold, we have two major supports as well. The first support is around 1930 to 1931, the green box that I've drawn here. Again, we have derived the green box or 1930-31 level from the options data. Option data is showing that we have a good number of contracts standing in 1930, and moreover, 1930 is also a trend reversal level. And then we have support around 1950. Around 1950, it can be 1951, 1948. Around 1950 also we have a good support. 1950 is a round number. Moreover, we also have previous resistance acting as support. In addition to that, we also have some contracts. If there is a minor fall in the market, if gold starts going down with normal volatility, 1950 is the next support where you can expect the market to bounce. But in case gold shows a big drop, there is a big drop, big red candles, then obviously 1950 will not be able to hold. In that case, 1930-31. So on the chart of gold, 1930-31 is the strongest support as of now. But yes, 1950 and then 1941 are also present as minor support. So on the chart of gold, two major resistances, 1980 to 83, 1980 to 1983, and then 2000 to 2004. These are the two resistances, and these three are the three support levels. Whether you are day trader, swing trader, you should be looking for good trades around this area. Usually swing traders complain that they do not get proper trading opportunities on the chart of gold. So these are the three levels where you can expect to hold a position for a couple of days. Okay, so these are the three levels. 1941, I won't say the 1941 is a major level, but still we can expect that at least market will give us a bounce and you'll be able to hold a trade for 1 or 2 days. But the problem with these levels are that these levels are far away from the current market price. And right now we can clearly see that there is not much volatility, and the sentiment of the market is also kind of mixed sentiment. So as a result, we cannot expect that market will be taking a particular trend right now. Okay. Yes, we have a good selling pressure around this area. We will be having good buying power around 1930 level, but these levels are far away. So as a result, you need to switch to a lower time frame like 15 minutes time frame. Okay, so the major levels are there, but the problem is that they are a little bit far away. So if you're looking for frequent trading opportunities and you are day trader, then obviously you need to switch to 15 minutes time frame, and you need to change your trading style. Right now you can see that I have switched to 15 minutes time frame. On the 15 minutes time frame, we don't have any major level, so yes, you need to be careful. If you're not a day trader, if you are a beginner, if you do not have much capital, then obviously you should wait for the major levels. Focus on focus on quality, not on quantities or number of trades. Okay. And if you have risk management skills, if you have the scalping capacity, okay, then you can look for these trades. So first of all, if gold starts going up, then you can see I have marked three levels here in dotted line. Around 1967 to 1968, we have FIBO 68.1% retracement level. Then we have 1971, FIBO 78.6% retracement level, and then we have 1975 to 1976, the level from where market dropped yesterday. So these are the three levels where scalpers can look for a quick selling opportunity for 20 to 30 pips, not more than that. Once you will see the market is showing price rejection from above, hit the sell button and exit after 20 to 25, 30 pips. After all, we are traders and we need to learn to be flexible according to the market situation. When the market was an uptrend, I told you guys that this is not a day traders market. You need to buy and sit. But right now, you can clearly see the market is not showing any particular trend. So as a result, you need to behave according to the market situation. We do have major levels where you can expect good trades, where you can expect good number of pips. But we cannot deny the fact that those levels are a little bit far away. So if you are looking for day trading opportunities, then yes, you need to be flexible. So these are the three resistances where we can look for quick selling opportunity. But beginners, if you don't have good experience, try to avoid it and wait for the major levels. Okay. Similarly, we also have a minor support around 1956 to 1955. During the day, before the US session especially, if you see market coming down and bouncing from the level, you can look for a buy around 1956, 1955 as well. But 1956, 1955 is not a good level to buy. So it depends on the market scenario. It depends on the market situation. So let's say during the European session market drops and bounces, then we can look for a buy. Otherwise, it would be better for us to look for buy around the levels that I mentioned. The strongest support is around 1930, 1931, but that level is far away. So as a result, our focus should be on 1941, around 1940, 1941, because of this drop, and 1950, 1948, 1950 level. If market takes support and bounces, we can look for a buy position. But my dear friends, confirmation is very important. No level is permanent in the market. We are retail traders. Our capital is limited. Don't forget that. Don't trade, okay, as if there is no end to money. Okay. So once market will come to the zone, once market will hit our zone, switch to a lower time frame, like 15 minutes time frame, 5 minutes time frame, and observe the market behavior. If you see market is bouncing, then only go for a buy position. Similarly, two strong resistances are 1980, 83, and 2000, 2004. But those levels are also far away. So if the volatility of the market remains like this, you can look for a quick scalp around these three levels. If market reverses on 5 minutes time frame, you can hit the sell button. How much you can expect? 20, 25 pips max. So that's all from my side, my dear friends. Bye bye, take care, and see ya day after tomorrow. Okay, and as I always say, be a trader, not a gambler. Bye bye, take care.